Welcome to Profit, Loss, and Lies. True stories of money, business, and the mistakes that cost everything. Today, how one software bug cost a Wall Street firm more than $460 million in 45 minutes. This is the true story of the Knight Capital meltdown. On one August morning in 2012, a major Wall Street firm began an ordinary trading day. This invisible powerhouse handled 10% of all U.S. stock trading. But a simple software update was about to trigger a catastrophic event. A forgotten piece of old code suddenly reawakened deep within the system. As the opening bell rang, the machine began trading at a lethal velocity. It was buying high and selling low, losing millions with every passing second. Panicked staff searched for an off switch that didn't seem to exist anymore. A glitch sent a shockwave through the entire American financial ecosystem. In just 45 minutes, nearly $500 million simply vanished. A titan of the digital age was brought to its knees by its own creation. To move at market speed, Knight used an automated order router called SMARS. This software decided where to send stock orders with no human in the loop. Automation brought speed and lower costs. But at machine speed, a small error can spread before anyone can react. In mid-2012, the New York Stock Exchange launched a new retail liquidity program. It was meant to give small investors better prices, and it began on August 1st. To take part, Knight wrote new software for SMARS and prepared to install it. The update had to be live and working by the opening bell. But SMARS didn't run on one machine. It ran across 8 separate servers. The new code had to be copied cleanly onto every single one of them. By late July, the update was ready. What could go wrong was about to become painfully clear. Inside SMARS sat a piece of old software called PowerPeg. Knight had stopped using it years earlier, but never removed it. It still sat on the servers, waiting to be switched on. Old code isn't harmless if the system can still trigger it. And the new update reused the very same on-off flag that once ran PowerPeg. Years earlier, Knight had moved a key part of PowerPeg in the code. It was the counter that told the system to stop once an order was filled. After that change, PowerPeg was never tested again. On July 27th, Knight began installing the new code server by server. The plan was routine. The execution was not. During the rollout, one of the 8 servers was missed. A new code never reached it, so the old PowerPeg code stayed in place. No second technician checked the work. Knight had no written rule requiring a review. So no one caught the mistake or that PowerPeg was still live. For days, nothing seemed wrong. 7 servers were right, 1 was not. The mistake was invisible, waiting for real orders to arrive. Early on August 1st, before the market opened, warnings began. Automated emails flagged an error tied to SMARS PowerPeg disabled. 97 of these warnings reached staff before the opening bell. But they weren't built to be alerts, and no one treated them as one. At 9:30, markets opened and real orders flooded into SMARS. The moment they reached that one server, the old code woke up. The 7 correct servers handled their orders normally. But the 8th began firing orders into the market in rapid, relentless sequence. Far more orders than any real request should ever produce. Here's the key idea. A customer's request is a parent order. To fill it, SMARS sends smaller child orders into the market. Normally, once the parent is filled, the child orders stop. But the broken counter meant the server never learned the parents were filled. so it kept sending child orders for each one endlessly. The scale is staggering. Just 212 customer orders entered the defective code. They spawned millions of unwanted orders, pouring out at computer speed. On Knight's floor, one account swelled with positions no one could explain. It pooled trades from many sources, so staff couldn't find the cause fast. And nothing shut it down. Knight had no automated control to halt orders once exposure passed safe limits. Its main risk tool only watched trades after they happened, run by people. It raised no automatic alarm, and under this flood, it lagged. Trying to stop it, staff removed the new code from the 7 correct servers. It backfired. Now, those servers ran the old PowerPeg too. In about 45 minutes, SMARS produced over 4 million executions. Across 154 stocks, more than 397 million shares. Knight was left roughly $3.5 billion long and over $3 billion short. After about 45 minutes, the orders finally stopped. When Knight tallied the damage, the loss was staggering. More than $460 million, gone in under an hour. Lost to software that did exactly what it was mistakenly told to do. Knight was suddenly holding billions in stocks it never wanted. Every one of those positions had to be sold or bought back. Unwinding them at market prices is what locked in the loss. The next day, Knight told investors it had traded out of the whole position. Its first estimate of the loss was about $440 million. And it admitted its capital base was severely impacted. A loss that size threatened the firm's very survival. Knight said it was pursuing financing to shore up its capital. It was a race to stay in business. Knight did survive, but not alone. In 2013, it combined with the trading firm Getco. Both became part of a new company, KCG Holdings, and the Knight name faded into it. But regulators weren't finished. The SEC brought its first case under the market access rule, the rule that requires firms to control the risks of their market pipeline. Knight settled, was censured, and paid a $12 million penalty. This was never just one bad line of code. Old code, a missed server, no review, ignored warnings, no limits, a bad response. Each failure was survivable alone, but automation multiplied them into catastrophe. So here's the question: should critical software ever trade live without an automatic shutdown? So what do you think? Should any critical financial system ever run without an automatic shutdown? Tell us in the comments, would a single kill switch have saved Knight Capital? If this story gripped you, subscribe for more, hit like, and share it with someone who should see it. This was Profit, Loss, and Lies. We'll see you in the next breakdown.